I wanted to also just start by thanking Lyndon for his welcome this morning, and also pay my respects to the traditional owners, recognise their custodianship of all of the country where we operate and explore right across Australia. Since starting in IGO at Christmas time, or just before Christmas, there's been a lot of change. And I know many of you will probably know the IGO story better than I did, because it wasn't a company that I was particularly close to sitting back in Canada and elsewhere in my career. But look, what's attracted me to come to IGO and to be part of the story hasn't changed. The great people and the great culture is a core part of that. And the workplace, when you get that, you can genuinely feel that connection. Despite the change we're going through right now, which is painful, and I'll talk more to that, I believe strongly that that's the foundation for a great company and something that I'm very invested in continuing and building on. Secondly, the passion and dedication around the energy transition and our contribution towards it. Peter set out a vision very early in the piece, before many people thought about it, around that and the contribution of battery materials, and it's something that I'm also dedicated to. Beyond that, IGO's got a great pedigree in mining. Obviously, it came up through the gold ranks into nickel and now more diversified. Exploration as well is a big part of our portfolio and who we are. And it's a modern mining business, and one that's seen as a leader in the sense of the responsibility, ethical mining, the way that IGO goes about business, and that's also very important for me, something that I'm dedicated to. And finally, it's an amazing platform, and a platform for growth and development. But first and foremost, starting with a great balance sheet and a part of a real tier one asset being there in Greenbushes. And the foundation's there to build on. There's still lots to do, but that's a big part of it. You know, when people ask me about why I joined IGO, there's some of the reasons. One of the other pieces is this fascinating part of our minerals industry called lithium. It's a commodity in a way. It's also a chemical, and it's very nascent, very new, and the stories around lithium, the information and the understanding is moving very quickly. I think there's a great opportunity to show some leadership as this part of the industry develops, and that's something that I'd like to be part of. Equally, it's critical to the energy transition. I'll talk more to that in a minute, but something that will be difficult and complex when you have a commodity that's growing at double-digit KGAR every year. And the third issue is we know that China's very influential here. They have committed massive investment, huge R&D, huge program of focus, and internally within their economy, they're driving their economy around the energy transition, not just with EVs and windmills and so on. I mean, they've really stepped up and got a leg up in that space. And so it means they're very dominant. They're very strong, and we need to look at how we work closely with them. And of course, I'll come back to our partner, Tianqi, later, but having that relationship's really relevant for us. I'm going to spend a bit of time on lithium, talk a bit about that market, both on the demand and the supply. I'll spend a moment on nickel as well. It's a tough story at the moment, as you all know. And then just wrap up with sort of a look back at the last 6-7 months at IGO and a bit of a look forward as well, just to give you a roundup of where my focus is. So first of all, on this world of uncertainty, you know, I think if you read the media, if you were to follow the story around EVs out there, no one knows. There's lots and lots of question marks. I love these cartoons. I think they really sum up the challenge, and they won't stop. I think that's really healthy for the conversation. But for me, if I look forward, I have a lot of conviction around EVs and this transition. And why is that? I've spent quite a bit of time in China, in particular recently as well, looking at the industry, the whole value chain, right through from the raw materials to the vehicles, and it's astonishing. What's been built there, that capability is absolutely amazing. The vehicles are fundamentally better than an internal combustion engine vehicle. They are cheaper to maintain, the total cost of ownership. They're a better vehicle to maintain and manage. The technology that's built into them future-proofs them from a sensors and automation point of view. Huge amount of focus on that. The second, I guess, part of the puzzle here is lithium, and there's been a whole bunch of debate about where lithium fits in the story of batteries, and look, I think it's too big to fail. I think that's probably the simplest way to put it. There's an awful lot of investment that's gone into lithium, a lot of R&D, And to replace that, and if you look right down to the chemistry, it would be very difficult to see that being replaced entirely. Does that mean to say it will be the only material or mineral used in that way? No, of course not. But it will be a big part of the puzzle, and I think critical to this transition that we're seeing. Thirdly is China's dominance, and I've already mentioned that. Their investment in this part of their own economy is significant, and obviously you can see them starting to position themselves to spread that across the rest of the world. They've spent an enormous amount on R&D. BYD is one of the well-known vehicle brands. I think there's something like 48,000 patents they've developed, and it's less than a 20-year-old company. Just extraordinary amount of investment in R&D and development. There are some issues though, so it's not all straightforward. Those challenges are important for us to understand, and this is why that pathway or that view on demand is uncertain. So we know that range anxiety is a factor, and it's driven by a few issues. It will require a real shift in investment from countries, governments, and the broader economy. But it also is going to require a change in behaviour, and I guess the simplest example is you think about your phone. I mean, you don't wait till it's flat to plug it in, but those shifts in kind of consumer behaviour are all going to be all part of this. At the end of the day, that is a big challenge. The second is the actual value chain around batteries, and China has already either built or committed capacity about double what they require domestically by 2030. So, go slow on that. That's a lot. And then the West has committed, might be a little shaky in some places, enough to meet their demand by 2030. So that suggests that, it's going to be pretty competitive. It's going to be difficult. And that's going to force a lot of challenge back through that value chain. It's going to force a lot of companies to think hard about how they compete, how they position themselves on the cost curve and so on. And it's going to create a lot of pressures through the system. We're thinking deeply about what that means as a lithium supplier, as a raw material supplier into that industry, and of course nickel's no different. I think there are big questions to come that aren't answered yet around cost competitiveness and returns in this industry. There's a lot of talk about demand-supply imbalance, but we need to also recognise how that plays out in the economics. And so I put the last comment there, demand versus supply and chicken versus egg, and I think that is going to be the story in the world of lithium and batteries for a while. It's not going to be a smooth run. I don't think I'm preaching to the converted here. At the end of the day, when you have a very fast growth rate, there will be imbalances through the way, and we need to be building businesses that are resilient to that can withstand those kind of imbalances, and therefore big volatility in the price, and that's what we're seeing right now. And so the cost curve is going to have to reflect that to some degree. Otherwise, we're going to have a bunch of capital deployed into assets that don't make sense. If we look forward to the overall market development, I love this chart. There's a guy called Andy Leyland from SC Insights that put it together, and the time frames will probably change, and I think the yellow bar, the yellow block there is almost where China is there a bit earlier. But first of all, we saw a few years ago that shift where demand for EVs outstripped supply, and that pushed prices, and it pushed a lot of other things, and the market went a bit crazy. Then we saw this period now where demand caught up, and we started to see a rebalance, and of course then consumers have got more choice, and we've seen a greater focus on plug-in hybrids in the interim. But we're very quickly getting to that yellow part, which is where EVs are fundamentally across all metrics better than an ICE. So certainly parts of the Chinese industry are there, and I think the rest of the world will catch up. And that's a place where then consumers are making the choice on merit. It's literally, I get a better product, a cheaper product, a better enabled product. Back to that point on range anxiety, you do need the charging infrastructure to support it. But once you get to that point, things can move very quickly. And the idea of an ICE will be something you keep as an antique or a Sunday driver for the pure pleasure of it. A little bit like a book, right? We don't read most things in paper anymore. We read on our iPads and our iPhones and a lot of other digital devices, but there's still something about the texture and the feel of a book, which I'm sure we'll keep. But that's not going to stop that shift to the equivalent of electronics for reading. It will be to EVs for mobility. That creates, obviously, a massive step up in lithium. And this is a chart you've all seen before. we sort of, in rough terms, need to triple the volume of supply in the next decade. And, you know, by any stretch, that's a big ask. I won't spend too long on it. If we drop into the next one, that's really where the big question is. I mean, yes, there's going to be some ups and downs with demand, and there's certain headwinds there that countries have got to work through, but I can see that pulling through. The question on supply is, can the industry turn up with 80 new projects that aren't financed yet in the next decade? Each of those, on average, is 20,000 tonnes LCE. The investment required for that, obviously at the moment, it's not going to be easy to come by. The work to get that done and the cost that it comes out on the supply curve are all still question marks. And that's where the lithium industry sits, which creates an awful lot of uncertainty, and why I've talked at the earlier remarks about how volatile this is likely to be. As you grow that quickly, the likelihood for demand-supply imbalance is really quite high, which is what we're seeing at the moment. Geopolitics will play a big part of this, and you know, you saw a bit of that with some announcements last week. How companies react to market access and to the different controls that are emerging, but I still believe fundamentally that the economics of the industry are what are going to drive most of the decisions, and that's at the moment very difficult. So moving on to IGO, look, obviously we're very well positioned being a partner and having a share of Greenbushes as the world-class lithium hard rock asset out there. It has got the lowest quartile costs, huge opportunity for optimisation and improvement still. And the EBITDA margins, are something that I still kind of shake my head at. It's amazing to think that today it's, even under these conditions, it's making a mid-60s EBITDA margin. It's an incredible asset, and it's got a long life, lots of upside potential, a lot of prospective ground around it as well. So that's really the core of our presence in this industry, and a great basis for us to learn and grow from. And the partners that we have, obviously Tianqi through our joint venture, and then Albemarle as the other partner in Greenbushes, are preeminent players in this industry, bring a lot of experience to the table. So that's a great place for us to be, and something that we'll continue to build on. But my primary focus is, of course, on making sure we do our part to get the very best out of Greenbushes, contribute towards it, and help it become an absolute world-class mining operation. There we go. I said I'd just make a few comments on nickel. This is a much more difficult story. I think it doesn't have the same parameters or characteristics as a commodity. Obviously, it's a much more mature market and much more challenging at the moment. And for the industry here in WA, I think what we can see is it's a commodity where there has been a structural change in the way that costs are sitting. The Indonesian laterites have really fundamentally changed that supply. And I think the important takeaway here is nickel there is largely being produced as an input to other industrial needs, particularly stainless steel. And so the cheaper that nickel unit is, the cheaper the stainless steel is, and the more market share and the more market position that those suppliers can take. And so they're motivated to use great technology, lots of smart capital, and lots of scale to just keep those costs down. And they've done a great job of it. Clearly they need to work on the impacts of that, and they need to work on the energy consumption and how they improve that. There are lots of challenges that they need to work through, but the fundamentals of the industry there in Indonesia are very strong. The demand outlook's also strong, so it's not a case of that being a big issue. It really is about the cost curve shifting and repositioning what success looks like. I think there's a shift in the incentive price, a long way down from where it has been, and the ability to compete in this space in WA is very difficult. Now, of course, with Nova, we're very privileged because that is a tier 1 asset. With its byproducts, it's about as good as you get. The unfortunate thing is there's only a couple of years to go, and I'm sure everyone would love to see another asset like that come up on the scene. They're probably out there. Our exploration team has looked and will continue to, but ultimately, unless you've got a very high quality resource, I think it's going to be hard to compete in this part of the industry. We're refocusing our exploration portfolio to be very, very surgical around nickel. You want to make sure that it's It's focused on things that can be economic. We're redirecting into other commodities as well. We'll continue to work through the option value at Cosmos, and that's getting us ground-up study to understand how that ore body could come to the surface. And it is all about its costs. It's not about what the price is. And ultimately, I think for nickel, it's about being crystal clear what it takes to win in nickel. It's very tough, and if you've got a low-cost, highly competitive business, then you'll be fine. Otherwise, it's going to be a difficult road. Just looking into the last 6 months or so, or since I started, where we've had our focus, I set 5 priorities at the beginning of the year. First on safety, and the team has continued to drive a shift down in injury rates, which is important to me. It's still a long way to go, and I'm really impressed with the improvement, but that for me is absolutely fundamental. It's something that's ingrained in how I work. Greenbushes, I've talked about the improvements that we can make there, the optimisation. Looking forward, but equally we've made some changes in the last 6 months in terms of how it operates. An example is the pricing arrangements on that asset. Kwinana is the lithium refinery that's shared with Tianqi, and it's had a very troubled upbringing, as you all know. The team there is working extremely hard on basic operating control and stability, and they've made some good progress in the last 6 months. They're working towards a large shutdown later this year, which will deliver a step change in performance. But this again is another example, despite the earlier construction issues here, just shows how tough this part of the industry is and shows how competitive China is. They ramp up these refineries in a matter of months, not years, and they've got a lot of experience and depth and a real cluster of capability around it. I talked about nickel, so we continue to focus on the cash flows from Nova and Forrestania, and preparing for growth. We focused on a broad review of our corporate and our exploration teams. That's been underway for the last few months, and we're going through that process right now, which is very difficult. I'm sure everyone in the room here has been through those processes, and it's very tough on our people, and particularly when you see people are very connected with IGO, IGO's purpose and values, to leave is very, very emotional. So it's a tough time, but it's part of the natural change that we need to make as our business evolves. And then looking forward for the next 6 months or so, there it is. So look, we'll continue that focus on safety I've talked about. Greenbushes, there is a lot of work we can do. Despite it being the lowest cost asset out there, there's more to do, and it's something, in my view, that we should constantly be chasing that incremental improvement. There's a new CEO being appointed, Rob Telford, ex-BHP, will start in October, and I think bring fresh eyes and a lot of mining pedigree. I'm sure some of you know him. He's got some nickel pedigree and time in iron ore and so on. Certainly someone who knows WA very well. So he'll bring a lot of fresh ideas there. Kwinana, as I said, there's a shutdown later this year that we're focused on, and that will give us a step up and help us understand the potential of that asset. For our nickel business, we're transitioning Forrestania to care and maintenance in the coming months, so that doesn't have long to go. Mines all have a life cycle. It's coming to its end, and I'm sure there's many people who've even worked at Spotted Quoll or Flying Fox. It's got both a long history. Very proud, and it's sad to see a mine close, but the team will finish it well and make sure that we manage that transition to rehabilitation very effectively. And Nova will continue to run hard and make that perform over the next few years. And lastly, in terms of our preparation for growth, look, we've got some new leadership coming on the executive team. Our corporate structure will start bedding down and start executing on our refresh strategy, which we'll share with the market in about a month from now. So there's lots happening, lots of change in the last 6 months for me, but it's been a real pleasure, very exciting to be part of the IGO story and helping write that next chapter. That's it for me. Thanks for listening.